to Think Budget, investment insights and really giving you some clarity around the 2025 medium-term budget policy statement having been delivered by National Treasury just yesterday. My name is Gugulethu Mfuphi. I have the pleasure of being your moderator and program director for today as we look to journey and evaluate some of the insights that have been shared by the Finance Minister yesterday in the MTBPS. As many of us would be well aware, this is fundamentally a blueprint to help us understand where we are navigating to in the medium term. Objectives regarding our growth, clarity in terms of fiscal consolidation, and of course, key outcomes that we need to be mindful of as we look to maintain our revenue. So this morning, I do want to take the opportunity to welcome all of you who are here present with us, also acknowledging key representatives of National Treasury who are also with us in the room. The Minister of Finance himself, Minister Enoch Godongwana, the Deputy Ministers in the absentia, David Masondo, as well as Ashok Sarupan, and not forgetting the Director General, Mr. Duncan Peterson, also joining us for today. As you can imagine, we've got quite a quick program that we will run through. So to those of you who are present with us here in the room, we look forward to your engagement and interaction in the various questions and opportunities where you too can pose your questions. As business leaders, as entrepreneurs, as individuals who play a critical role in making sure that we all shape not only the narrative and the confidence that has been set in South Africa's economy, but also challenging some of the assertions that might have been made by National Treasury just yesterday. To my colleagues in the media as well, your participation is always welcome, including the conversations that we have so robustly, and not forgetting the team that is joining us online via our LinkedIn stream. You're more than welcome as well to participate by sharing your questions, typing them into the chat service. At some point, we will be able to moderate them and represent them here in the room by directing them to the most appropriate speakers. On that note, I don't want to hold you back any further because we all know that there's a lot we want to get through. We'll have a panel discussion from esteemed representatives of RMB. We'll also have an opportunity to hear from the Finance Minister himself. But of course, none of this would be possible without getting clarity and an understanding of the agenda for today. To set the tone and welcome us all officially as we commence this morning's program, I'd like to welcome someone who has a wealth of experience within the realm of economics. Having worked in the public sector, at National Treasury at some point in his career, starting off in the IMF, and of course in various banking and financial services institutions, Isaah Mhlanga currently leads as the Chief Economist at RMB. He'll help us set the tone, welcome us all as guests, and of course welcome our keynote speaker and address this morning, the Finance Minister, Mr. Enoch Godongwana. I'm well aware, we all know he's been speaking a lot for the last 24 hours, but should there be an opportunity to engage him further and probe him further, we certainly hope that he will be open to this opportunity. Nudge, nudge, wink, wink, Minister. On that note, please warmly welcome to the front of the stage the Chief Economist at RMB, Mr. Isaah Mhlanga.
The Finance Minister, Mr. Enoch Godongwana, we are honored to have you this morning for our Think Budget breakfast. The Deputy Finance Ministers, Minister Masonto and Sarupeng, we are glad with your presence this morning. I'm aware or I've been informed we were also supposed to have the Deputy Minister of Trade, Industry and Competition if he is going to come. Thank you so much for gracing us with your presence, and the Director General of the National Treasury, Dr. Duncan Peterson. Thank you so much for being here this morning. And to all our clients that we are ultimately here for, thank you for your partnership in pushing this country forward. You are the real investors in the economy, and I'm sure the team at National Treasury is also here for the same reason, to make sure that we have a better understanding of the budget, and when you make decisions that are well informed. So thank you so much for gracing us with your presence, and hopefully you're going to find this morning quite useful and informative for your decisions. Perhaps before I introduce the Finance Minister or call him up to give his brief remarks, let me put something that we see or that we hear in the market, which has been a little bit of a thorny issue for me. There is a narrative that says the team at National Treasury, they have, in terms of their capacity, they have declined over the years. But I would like to put it to all of us in this room. This is the team that put 3 budgets during COVID, one of the most disruptive times of our lives. This is the team that put, again, 3 budgets this year with a change in the political environment with the GNU. And yesterday, we saw the tabling of a medium-term budget policy statement, which immediately we saw the 10-year bond yield declining by 20 basis points. But if you take it longer to earlier in the year, 230 basis point decline in bond yields. That says there have been great work that have been done at National Treasury, which then suggests that the questions on credibility, the questions on capacity at National Treasury, perhaps we need to put them to bed. We have a competent team that has managed to put the various budgets together, particularly this year when we have disruptive trade tensions and uncertainty globally. If we could agree on that, I think we would be in a better space to thank the National Treasury for the work they do and to give them the confidence to continue doing so and bringing our fiscals into a sustainable level. Minister, as you come to make your own remarks this morning, we engage with a lot of investors locally and internationally. Perhaps you could also put a word to the clients to say, why are they so negative when international investors are so positive? There is that disjoint between global sentiment towards the country, which we see in inflows, capital coming into our country, and sentiment locally. Perhaps it has to do with the municipalities. So you could maybe address the issues at municipal level, which a lot of our clients in their own personal lives, they experience on a day-to-day. So their business heads experience something different to their own personal lives. So do address some of those concerns so that we can lift the confidence that is necessary for lifting investment. Thank you so much. As I call you to come and give your opening remarks, hopefully everybody is going to find this useful. Thank you.
Good morning. No one's greeting me. The program director, Gugu, you seem to be winning this tender every day. Deputy Minister Sarupen, I can't say Deputy Minister Masondo, but I can assure you, he also assured me that he's also going to be coming. My Director General, Dr. Peters, fellow South Africans, and my clients, you are all my clients. This term of the budget is a very difficult one for us. But I can assure you, Isaah, I saw one guy who was criticizing our capacity as treasurer. It turns out that this guy is conflicted. He wants us to give him some work. So always analyze who's criticizing the treasury guys and what is the interest. But having said all of that, I want to apologize to my Director General and my Deputy Minister and to you as my clients. I want to assure you I'm not a Marxist anymore. I'm a defunct Marxist. But I want to start by making an observation of what Marx says, and his observation is, in the circumstances, appropriate. He says we're making changes But as we do so under conditions not of our choosing. I think that's quite an important observation. There's nothing communist about it. It's just an observation as to how society evolves and how we do things. We're doing things under conditions not of our choosing. That's what frames your budget. The global conditions, the domestic conditions, which as Treasury are conditions not of our choosing. We've got to find how do we navigate those conditions. And I think that's what is confronting us, what's happening in the global economy. Some people, we do not know whether the tariff impact are delayed impacts or is it the normal? We also were used in South Africa to a one-party system, in a sense, although it was a democracy, but there was a dominant political party, which is my party. Everybody became so used to the system that we couldn't predict what would happen if the system is disrupted. By the way, how long? I must be careful.
You've got time, 30 minutes.
Oh, okay. I should be careful. Politicians, when they see people like this, they think that it's an election time and campaigning. So, here is the GNU. First and foremost, nobody predicted before the elections that we are likely to have that outcome. And therefore, no one planned for working what constitutes a coalition government. Lesson. We learn as we're going along, we're beginning to learn. Among other things was an absence of a framing of what is going to be an appropriate coalition government platform. And an absence of that manifested itself during the course of the year, of the budget. An example of the issues that were being fought around the budget had nothing to do with the substance of the budget, had everything to do with the disagreement of the parties on certain policy positions, whether you call the Expropriation Act, the Bella Act, and so on and so on. And that manifested itself in the budget process, in the budget process. Then we've got to learn how to navigate that. And I think all parties have learned a huge lessons that we ourselves have learned to say, how do we make sure that we can consult as much as possible. For instance, as we're going to table this medium-term budget policy statement, the president had a meeting. The media called it a secret meeting. Whereas he calls these meetings with leaders on a regular basis. Deputy Minister, you can come in. You were welcomed in your absence. Deputy Minister of Trade and Industry. So it was not a kind of a secret meeting. The president called these meetings on a regular basis with leaders of the opposition, not opposition, of the government of national unity. And in most of those occasions, that's why I'm normally invited to make a presentation in those meetings. In this particular circumstance, for instance, when they met in that place, they called me to a meeting. I couldn't go because I was stuck in Cape Town. So both the DG and myself had to make a presentation of the medium-term budget policy statement. That's why you will see that yesterday, virtually all members of the Government of National Unity were on the same page in supporting the budget. Not a single member of the Government of National Unity took a different turn. What was interesting was also some of those were not part of the Government National Unity, like the Action SA and ACDP, also were positive. So it is that consultation which we're beginning to learn, but there are also some challenges with the consultation process, because some of the budget information is market sensitive. In the process of consultation, things leak. Things leak, as Kulegani here phoned me and says, I've got a reliable source that you are going to have inflation target, you are going to change inflation targeting on Wednesday. And the source was correct in one point on that point. That's the source. But the source went further and said, no, I've been persuaded by Goldman Sachs and JP Morgan. And the interesting thing, I've met Goldman Sachs. They normally come, they always make sure that they find a slot, how Goldman Sachs. JP Morgan, I didn't met, they met by the deputy minister in Washington. He didn't tell me that they convinced him to change the inflation target. Did you tell me that, JP? So things leaks in that way. But what have we set ourselves as our key objectives, and where are we? Our story rotates around four pillars: macroeconomic stability, structural reforms, state capacity, with specific reference to municipalities, Isaah, and investing in infrastructure. Now, we need to be evaluated on those. Key on the macroeconomic stability side is to ensure that the public finances are healthy. And we set ourselves a target that in 25-26 financial year, we'll reach the peak of the debt to GDP. We proudly say we've achieved that target. From 26-27, our debt to GDP is beginning to decline, as we predicted. Something we didn't announce as part of this macroeconomic stability is inflation target framework. And there was when the governor made the Reserve Bank Monetary Policy Committee and made an announcement, and I kind of reacted, and people said, hey, these guys are fighting. No, we're not fighting. Khanyago and I have known each other for 35 years. For 35 years. When I met him, he was 24 years, 4 months. So he does believe that I've got a tendency of bullying him because of the age difference. So we have already had a general agreement between ourselves, because we've got what we call the macro standing committee of both officials of Treasury and the Reserve Bank. We already had that, and when I presented the vote of the department, I made the point that a lower inflation is good for the economy. But I didn't go further, because there are people like this one, who was the chair of my Economic Transformation Committee of my party. So DM and I had a responsibility. He's going to manage his crowd. I've got to manage mine. So the governor doesn't have that constraint. So we had to manage our own problem, because we had to manage and make sure that by the time we make this announcement, there's political buyout. That's the political economy of managing macroeconomic stability. Is such that as a minister, you've got that responsibility to ensure that there's a political buyout on this issue. So we can safely say, as we made the announcement, we've covered the ground. We've covered the ground. I'm sure that's why he's here. He wants to make sure that I toed the line. My chair of the ETC, when I was briefing him, he said to me, "No, Fagu, you pardon me, I'm somebody who does not keep secret." He says to me, "Oh, no, my worry is not the 3%. My worry is the spread. 3% is, but this governor is still keeping interest rate high. What is the point?" All other things having said, we managed to find our way, and it's his duty to then to manage it in the party. I said to my deputy minister, "I can't handle this thing alone. You've got to see how you are managing it in your own party." And he delivered. So I'm just highlighting the political dynamics even of achieving these fiscal targets. So that's one part of the macroeconomic to keep the inflation down, reduce the cost of borrowing for business, reduce the cost of living for consumers. That is fundamentally important. We also have done an interesting thing on the fiscal side, which is one line in the budget speech, and a number of people didn't pick that up, which is one line in the business, to finalize this concrete on both sides of the equation, on the monetary side and the fiscal side. Looking at inflation targeting this side, on this side, how do we achieve fiscal prudence in a manner which is manageable over the long and predictable over the long term? Predictable over the long term. We've published a document for debate on fiscal anchors. In the speech, in one sentence, we kind of point in the direction that that's an issue that needs consideration moving forward, so that we should have this kind of macroeconomic stability, predictable rules on both sides of both the monetary side and the fiscal side. I was glad that the journalists and everybody didn't pick that on time. I'm not sure whether I was in a good mood to answer them yesterday, but I can answer them today. Yeah. So the target is the debt to GDP. As I've said, we've reached that. But a key instrument to achieve that has been the primary balance. So now we have achieved a surplus in 3 consecutive years. 3 consecutive years have been achieved a surplus in the primary balance. And that's critical for us to achieve that debt to GDP trajectory, the path we want to do. Another element, it became clear to us during the fight over the budget beginning of this year, that moving forward, as we want to maintain the debt to GDP in a different pathway, we can't increase borrowing. Secondly, increasing taxes is not an easy option. What do we do? So the only way you can increase revenue is by increasing borrowing or increasing taxes. Those two avenues are closed to us. What does that mean? It means we've got to resort to what is the most difficult task, challenging, is to manage the expenditure in an efficient way. We talked about spending reviews. Duncan and his team have become creative. They call it now targeted responsible spending. What? Responsible savings, yeah. You know, you can see I'm still struggling. They came into a meeting with me and said, TAS. I said, what is that? They said, it's targeted responsible saving. I said, where does this come from? I said, no, we've just changed what is the best way of dealing with spending reviews. It's one of the difficult challenges you have because people, departments and individuals and ministers have got vested interest in defending their programs. In our first meeting of the Ministers' Committee on the Budget, we debated one institution for 1 hour, whether we should close it or not. Vested interests were strong in defending the institution. I can tell you now, if I were to say I must close NEFSAS, I would close NEFSAS with my eyes closed. Tomorrow, boom, close it. Because what does NEFSAS do? NEFSAS is supposed to be taking money from the Department of Higher Education and transferring it to universities. You don't need that conduit. You just need to transfer money to universities, since the university do the task. But we created some strange thing called NEFSAS, and the CEO, I was telling the president how much this, he said, I can't believe they're earning more than me. I said, yes. The CEO of NEFSAS earns 4 million. Right? But not only have they done that, they've also decided to outsource their own work. They have employed 4 other service providers to do what they were created to do. I can tell you now, I can tell you even students and everybody have been co-opted into defending this thing. If we were to close it tomorrow, you will see some protests in universities. So this route is also difficult to pursue. The Sport, Arts and Culture have got 27 or 28 agencies. What are they to? So it's easy. We've become creative and say we can't increase taxes, we can't borrow more. What is going to need is to cut programs, which I enjoy. I was looking at my other budget, medium-term budget, which I delivered again in the same. I had hair here. Now I don't. I didn't realize that I'm losing hair until the president made the statement. I don't know where we was addressing. He said, you can see he's losing hair. So what I'm saying, macroeconomic stability is we're focusing on it. We're focusing on our public finances and making them healthy. We're dealing with the debt to GDP. The interesting thing, when we deal with that issue, we're also reducing the debt service cost. If you were to refuse from learning and culture, you take culture out of learning, then debt service cost becomes the biggest item of expenditure. Now, also debt service costs are beginning to come down, which means all our strategies becoming to bear fruit. But key to this thing, we can't only rely on inefficient expenditure. We've got to grow this economy. You know, I normally say, debt is not your problem. Debt is not your problem. Debt is your capacity to service that debt. In a growing economy, you have got the capacity to service debt. That's why no one worries about most of the developing economies having a debt to GDP, which is more than 100%. But with us, it becomes a worry as soon as you approach the 80s, because the capacity to service that debt becomes limited. So we've got to grow the economy. The structural reforms are intended to do that. We've got to now we spend some time, we've taken a lot time to deal with the issue of electricity. Spend more time trying to fix Eskom than fixing power to the grid. And those two are different. We're not going to repeat that template when we deal with Transnet. We'll be fixing Transnet, but at the same time, fixing the logistics sector in the country and creating competition. Because the difficulty you have, once you have got institutions that are so big to fail, it's also difficult to change, to transform them. Because leadership becomes intransigent, and in that environment, you've got no option but to deal with them. So these reforms are intended to achieve those objectives. So moving forward, I think I've got two bright young people who are younger than me, my deputies, both of whom are bright. I'm sure they can do this job better than I do. I'm old. Even my thinking is old. So moving forward, we need to take some of the, the difficult choices I've learned. By the way, when I first joined government in the Eastern Cape, I was a member of the Politburo of the Communist Party. I hated outsourcing like anything. But when I found that public works can't do the road between East London and Port Alfred, I fired public works and employed a private sector company, which I could penalize if it does not deliver. So at my age, I'm not guided, I'm guided by facts. What will it give me more effective things? Somebody was telling me now, saying that the unions are criticizing me for lower inflation. I said, but these unions are criticizing for lower inflation because the assumption is, which is incorrect, that to arrive at a lower inflation, we'll have to raise interest rates and choke the economy. They are not looking at the current South African situation, that inflation is already at 3%, hovering around 3%. That's the reality. The Reserve Bank doesn't have to choke the economy in order to arrive at that. In fact, most analysts are Isaah, not me. If I can say that the Reserve Bank, the governor can phone me and scream at me, what are you doing with monetary policy? So I leave that to analysts that are saying, in all probability, even next week, a possibility could be that they cut interest rate. I don't know. But in South Africa, we're already on an inflation path which is already hovering at around 3%. And is therefore in the interest of this economy to target a lower inflation, which by its very nature will have an influence on the interest rate. And the lower interest rates are in the interest of the broader economy of this country, for jobs, for employment, for investment, for households expenditure. Household expenditure is 60% of GDP. What is my story? Relax. That's all that I'm saying. And I'm saying particularly what Isaah was saying, South Africans are too negative. Even you read the newspaper, the first thing they look at, what is the negative things we can say? Franz Konya sent me a WhatsApp today, those who know Franz Konya, he says, it's probably one of the first positive things that has been universally accepted, your budget as positive, something that comes out of government, because people think it's the best way is to bash government. But as you do that, you're also bashing your own country. I'm not saying you should not bash a politician, not the country. Bash a politician, not the country. You know, I was saying to the people who are taking the budget at the beginning of the year, say, don't say is any political party, you are confusing this thing. Say, this Minister of Finance we have is a rogue Minister of Finance. I will live with that. But let's be patriots. That's why I was stating, for instance, as I conclude, that it touched me, the statement which was done by those fellow South Africans and patriots, Afrikaners, who wrote that not in our name. It was a patriotic statement that says, despite all differences that we have in our country, but you cannot create an environment that there's genocide in South Africa. And in particular, we as Afrikaners, which I like it, as patriots, I think that's what we must distinguish between the country, the party, and individuals. Individuals come and go. The parties will also come and go. A lesson is my party is no longer the dominant party, which says things change. But I wish to, it's not that my wish, but conditions of my, I quoted Marx before you came. You've been excited, you and David Masondo, if you were here. But I'm saying to you, we are turning the country around, back to its glory. A.D. Eindhoven, also addressing Stellenbosch, made the same point, that gradually, we're turning things around. Thank you. I normally speak a lot and non-stop, so relax, I'm stopping now.
I want you to disappear too quickly. I'm hoping we can keep you on stage for just 2 more minutes because you're bang on time, but we do want to squeeze in just 2 more questions that we could actually address to you, Minister. But thank you for your feedback. You can join me back up on stage. This just might be another ambush, but I promise it's not. It's a safe crowd. Okay. But if anything, Minister, you've made it very clear that we promise we'll just take up 2 minutes of your time and also open up an opportunity just for 2 brief questions from the audience or from anyone online to join us. Given that this is an opportunity we have to interact with the Minister, I must say we appreciate the fact that you've given us a heightened level of clarity as to where we are right now. One particular theme that you touched on is the fact that we are seeing a heightened level of alignment with regards to the GNU. We've gone through the growing pains, but now we're well aware that we are finding a level of clarity as to how it is that through combined efforts we aligned in terms of the outcomes. As you've touched on as well, significant contribution to making sure that we continue to invest in the likes of SARS to increase their appetite for tax collections, and of course clarity on the inflation target. That's been a big one, and for anyone who's been in the audience, I see a few heads nodding. There's some concerns regarding the cost factors and perhaps the risks that we might have to endure in the short term versus the benefits that we'll face in the long term. So perhaps if I can ask you that one related in particular to the management of the public wage bill. Going forward, Labour's reaction, you've touched on it briefly, but give us a little bit more scope as to the level of alignment and flexibility we have to ensure that there's a level of trust, communication and clarity regarding the short-term stress and strain that we might feel, but understanding the long-term objectives, especially when it comes to a 3% inflation target and its impact on wage negotiations.
That's difficult and easy. Difficult in the sense that we structured an agreement, a 3-year agreement, and locked ourselves to between 4, with the base being 4%. So for the next 2 years, will probably be wages will be sticky in that sense. But we're coming into that thing. This Director General is creative. It's not me. I don't want the unions to hate me. They are my friends. This Director General is creative. We're coming into it in a number of ways. First, we're dealing with what is called OSD, Occupation-Specific Dispensation, which is beginning ballooning, pay progression, which is ballooning. For instance, it differs. The Army, the pay progression is 2%, in other institutions, 1.5%. We're beginning to claw back on some of all of those. In addition, we are talking about early retirement. It's going to achieve 2 objectives. The first one is to rejuvenate the public sector. The second one, it will have an impact on the headcount. Linked to it is the targeted responsible saving in all those organizational changes I was talking about. So over time, while we have that sticky issue in terms of the wage bill until further negotiations, there are issues on the wage bill we can claw back, which will make sure that the wage bill does not necessarily escalate unnecessarily.
Got you. Managing those particular costs and, of course, exercising a level of restraint. Minister, another theme I'd like to touch on just before we go to the audience is, of course, looking at growth. As we do see a revision of the growth forecast, slightly lower than what many of the other institutions like the BER or even the SARB themselves have shared in terms of objectives. And there is still concern within the South African investment community that we're not doing enough to really invest fully in the catalytic growth drivers of the country. Your response to that?
The accusation cut both ways. The Business Day carried an article which says business themselves are keeping about 2 trillion rand as cash, not investing it in productive capacity. We may take the blame to the extent that people may say, we're not investing because you guys are not behaving. Okay.
Confidence is what they often refer to.
No, I mean, we need to have a conversation about that. What are these issues? You know, I hear every day people talking about policy problems and so on and so on. If you ask me, I would like to know about them. So that let's have that conversation, because we would like to see investment in the economy, remove all those bottlenecks which are making it difficult for people to invest in this economy. Are we able to have a conversation along those lines? An example, I was asking Prof. Christine from BER. I said, when you guys talk about the confidence, what are some of these issues? Some of these issues really need conversation. People are saying, no, but you guys are not taking decision. And one of them was, when are you going to take a decision what are you going to take a decision about the public,
public procurement?
No. Shamila Baton.
NPA.
Now, those are the issues. I would say, but can people not really lose confidence because a decision of that nature has not yet been cleared? All I'm trying to say is that, can we have a conversation? What are these issues which are making business not invest? We are recovering, we accept that. Our institutions have been hollowed during the state capture period. To actually think that you can come out of that fairly easily by merely a decree is not an easy thing. What is coming out in the Mhlanga Commission is clearly a demonstration of how the security cluster has been hollowed over during that period and used for purposes other than combat crime. So you can see that coming out in the Mhlanga Commission is a product of the state capture period. And we accept that those are the things we need to, on our side, we must shoulder the blame. And I can't even say, no, it was Zuma period. The truth of the matter, it was an ANC period. Finish. We must accept it and take responsibility. That as the ANC during that period, we dropped the ball.
Got you. Minister, I am aware that we're under pressure for time. Yourself and the Director General do have to leave to participate in investor roadshows, but I am quite keen to take just 2 brief questions from the floor. If we could keep them brief and concise. Your hand has gone up, sir. A colleague will bring a microphone. We've got your hand. Kulegani, I see you. I see the Minister looking away as I mention your name. I'm teasing. He's probably
I'm
used to your
looking for a
questions.
pen.
No problem. We'll assist you with a pen shortly. So if you could go ahead with your question. We've got the other mic over there. Kulegani will come to you as well, just to squeeze in 3 questions. We'll take them back to back in the interest of time and get the Minister's feedback from you.
Minister, good morning. My name is Shane Watkins. I'm the Chief Investment Officer of Allweather Capital. It's a great honor to ask you a question, and I want you to know that I think all of us are very proud to have you as our Finance Minister, and congrats on your budget. My question relates to tax policy priorities. National Treasury has spent an inordinate amount of time looking at how they tax collective investment schemes. Now, the savings industry is fundamental to investment in our country, and it's the one functional area of our economy that I think really works and is constructive. Uncertainty there is not helpful. On the other hand, we have the online gaming industry. Now, the online gaming industry, it's estimated, consumes up to 1% of South African GDP. I think we're like a 7 trillion economy, so it's about 70 billion per annum that this industry is extracting. Some surveys indicate that between 25% and a third of NSFAS grants and government support grants go into this industry. The shareholders of this industry live offshore. This is an industry that is essentially funded by the South African taxpayers.
Yep.
And I wonder what you guys can do about it, because it's a real concern, and in my opinion, it's a very corrosive thing in our society. Thank you very much.
Thank you so much, Mr. Watkins. Appreciate your question. We'll come to your questions next, sir, followed by Kulegani.
All right. Good morning, Minister. My name is Mkokeli from SABC News. My question is going to be a brief one on transparency and public trust. Minister, public trust in how government spends money remains low due to perceptions of corruption and waste. How does this budget, Minister, strengthen transparency and public confidence in how funds are managed? Thank you.
Thank you so much, Mr. Banks. I appreciate your question. Kulegani, if the mic could move forward, and then we'll have your question. Fantastic.
Thank you, Minister, for your time and forbearance. I'm interested in asking about the targeted and responsible savings initiative in the platform. It's a 3-pronged question, to be honest, and do forgive me if this has been stated in the lockup yesterday. But I'm interested in finding out, first of all, is there a medium-term ballpark figure in terms of the kind of savings that the initiative would like to secure, first of all. Second of all, I'm interested in the R in TARS, which is responsible, and trying to find out if there is technical capacity within National Treasury to ensure that the savings are indeed responsible and not quite as dire as what we've arguably seen from Doge, for example. And then thirdly, where do the savings go once they're secured? Thank you.
Thank you so much. Solid questions that we have from all of our participants. Minister, I'm aware that you might have the opportunity to direct some of the responses perhaps to members of National Treasury. So if there is another mic available, perhaps we can bring it closer to the floor. But perhaps let's start off with Kulegani's question, specifically focused on the targeted and responsible savings. 3 objectives that he highlighted there regarding a medium-term ballpark figure, the responsible, how that is measured, and of course, outcomes as to where the savings will go. You keen to respond to this, Minister?
Can I do it the other way around?
Sure.
Let me deal with the other questions and ask the DG to deal with the TARS.
Got you. In the meantime, we'll just make sure that a microphone is available for the Director General.
The DG will deal with that. Let me check with the tax policy and investment schemes.
Behind you.
It is true that National Treasury published regulation which we intend to do that. And the fear from the collective investment schemes is that it may attack what they call the what capital gains and then therefore destroy the industry completely. I've had that. The discussion I've had with the team yesterday is that they pull back, they're having a workshop with you early in the year to discuss this particular matter. So I think we'll just park it there for now.
Online gambling?
I'm coming to online gambling. Online gambling, we've got a discussion paper we wanted to publish yesterday. The DG is looking at me because I'm the one who pulled back a bit. We published on yesterday discussion paper because we want to say something in February on it. But my colleague, the Minister of Trade and Industry, was in Egypt. So I wanted to make sure that before we publish that, we're aligned with the Minister of Trade and Industry. It's an issue where we feel strongly as well as you do. There's a complicating factor though, is that gambling for taxing is a provincial competence. The question how we're going to manage it, that's why it's going to be critical that we work with the Department of Trade and Industry in dealing with it. Mhlanga is already beginning to go in that direction. Mm-hmm. So we will be having a discussion with my colleague. I did raise it with him. We're in a function together yesterday. That's a matter we need to wrap up fairly soon. Transparency in, I think one of the things we said in this budget, the DG may add, we said we published yesterday a portal whose main purpose is to publish all tenders, the suppliers, everybody, and so on, for the public to know who has got what tender. I even used an example when I was delivering the speech, and then the EFF screamed at me, and the MK, they must have drowned it, and people did not hear what I was saying, because I said, for instance, if you look at the Tembisa Hospital problem, what the people in Tembisa Hospital did, the regulations say you can't issue a tender. You should not issue a tender for anything below 500,000. Anything below 500,000, you can only simply ask for 3 quotes. So what they were doing was to slice tenders into less than, in 499,000, 499,000, so that they should not meet that threshold. And in the process, then ask for 3 quotes, and corrupt activity took place and developed the syndicates in that. I'm saying that portal we're publishing now is going to be able to reveal that and throw a red flag around such practices. Mm-hmm. So that's the, some of the things we are doing for transparency. DG, you can take that point further and also talk about TAS.
Thank you, Minister. Good morning.
Director General, just as a polite request, if you could please join us on stage, or perhaps stand up and face that way, as my colleagues in the media and those online would be able to see you.
Okay. Yeah,
thank you, sir.
Sure. Thank you, Minister. Good morning, everyone. So I think, Minister, you've covered the issue of the procurement dashboard. Just to say that at the moment, what we have on the dashboard is all the information from the payment system. Most provinces are covered, with the exception of provincial legislatures. Most public entities are covered, and most national departments are there as well. Anyone who's not covered will be covered by an instruction note that we issued this week. So eventually, from next year onwards, all of that payments information will be public. It's downloadable, it's searchable, so everyone can see exactly which payments are being made to whom, so that we usher in a new generation of transparency, and, to the Minister's point and to your question, public accountability for public spending. In terms of TARS, Kulakani, to your question, we've indicated that in this fiscal framework, we are penciling in 6.7 billion in savings over the next 3 years coming out of TARS. That's mainly because of the scaling down of one program that has proven to be very ineffective in many parts, which is the Public Transport Network Grant. The second aspect of it is savings due to in the social grant system. because of the efforts that ourselves, SASSA and DSD have made around dealing with social grant fraud through greater levels of verification of social grant beneficiaries, essentially exiting people from the system that shouldn't be getting access to social grants. To give you an example, when the department earlier this year did an audit of 55,000 social grant beneficiaries, they found that around 4,000 of those beneficiaries out of the sample of 55,000 were not entitled to receive those social grants. And so that will, as that work intensifies and those verification exercises happen, that will increase. We plan to make further announcements at the time of the budget, to your point, beyond the 6.5. At this stage, it's very difficult to say what those will be, partly because, to your point about responsible, this is informed by detailed technical work. So the idea is there are detailed spending reviews that we do with GTAC, the Government's Technical Advisory Center, which is housed in the Treasury, to make sure that the proposals that are made to the Ministers in Committee on the Budget is informed by evidence and is done in a responsible way. Your final question, I think, was about, let me just double check here, Tars, where the funds go. Where funding go is always a function of the fiscal framework, the decision of the minister and the decision of cabinet as presented to Parliament. So we'll never preempt where savings are directed. We make proposals on where savings should be directed to the minister and to the Ministers' Committee on the Budget. They then take it to cabinet. They confirm that decision or change it and then take it to Parliament. So that is the subject of every budget process in February, in October next year, and so on. Thanks.
Thank you so much, DG, for the responses to those questions. I have invited the online audience to participate in the Q&A, and there are two questions that have come through, Minister, so we'll take those and then get your concluding remarks from there. The first one actually speaks to the decrease in debt and the objectives and targets you've set out for 2026-2027. The question asks, does the expected decrease in debt to GDP by 2026-27 onwards include a newly acquired loan from the World Bank of just over $925 million US? That's the first question. The second question relates to the fact that we are reflecting on the unemployment figures that were published earlier this week for the third quarter of this year, highlighting that just over 17 million South Africans have been absorbed into the job market. And it actually speaks, if you could actually share a word of encouragement to the other disencouraged employees in South Africa. But let's start off on the debt question. Does this include a loan from the World Bank of over $900 million US?
That reduction is not about reducing a specific loan. It's about the global picture, which may include debt redemptions, which may include reduced borrowing. That's what debt reduction does not talk to a specific World Bank loan. No. We may decide not to, because of the level of debt, our deficit may be low in such a manner that we're not going to be borrowing more than normal, and therefore you reduce your stock of debt. So it's not about the World Bank loan. The World Bank loan has got a term. I remember the first one I signed when I joined government was a loan from the World Bank, 3-year pay and holiday, whatever. Which means for 3 years we're not going to pay. And therefore, also 300 basis points below market price. Why would I not take such a loan? You see what I mean? So it has got its own time. It doesn't mean I'm going to reduce the World Bank. I'm sure this person has got a specific gripe with the World Bank. Whereas we're talking about the global picture of the debt. Maybe you can add, DG. Yeah.
Got you. To close off with, Minister, you've shared and been very open in terms of the feedback that you've given us. So we appreciate the level of confidence and transparency that has been highlighted. I guess as we prepare to get you off stage, perhaps your final message to South Africans, those who are economic contributors, as we see in the room, those who perhaps might still be disgruntled within the workforce, given the unemployment figures that we see, and of course your reflections on SMP and their anticipated review of South Africa's rating by the end of this week.
Yeah, let me just say, our fundamental challenge is growth. And I've said even debt is a function of growth. If the economy is growing, your capacity to service that debt is enormous. So our focus as South Africans is how do we grow this economy? And that requires not only the public sector, it requires also the private sector. What we have been doing in a small way is to attract the private sector to invest in the public infrastructure. In so doing, we think that they will also invest elsewhere. So the key is how do we promote that investment into productive capacity so that we should grow the economy, grow employment. Once we do that, everything else just follows. Whether it's employment numbers, whether it's income, whether it's poverty, all of those things will follow. So we should be focusing our minds around how do we grow this economy. Mm-hmm. And I think that's a conversation all of us should have together, not only a government. We should do that. If we can do that and also unlock that 2 trillion that is sitting out there from private sector, which is not being invested in productive capacity. But it can only happen once we know what are these challenges so that all of us can work together. So the fundamental issue we're promoting in this budget is growth. Secondly, we're then promoting efficiency in government spending. Thirdly, we're reducing the cost of borrowing for the investment and for households. And that on its own is critical for all of us and reducing that cost of living. So that's the message we're sending to South Africans and say, let's work together. We're turning the corner. We need the cooperation of every South African citizen to travel this journey.
Minister of Finance in South Africa, Mr. Enoch Godongwana, thank you so much for your openness and encouragement into growing the economy going forward and providing the confidence that the audience and market does need in such turbulent times given the global dynamics. Thank you again for your time, sir.
Yeah, thank you and congratulations for the tender.
Thank you so much, Minister. I can officially declare that there's full transparency in terms of the disclosure of this particular tender. So there are no concerns at all. To the Minister, to the Director General, the Deputy Minister as well, thank you so much. And Deputy Minister within the Department of Trade, Industry and Competition, thank you for your time and, of course, engagement here today. I am aware that you all are participating in investment roadshows, so we will be mindful of the sensitivities given your time and potential exits you might have to make during the duration of the program today. However, many of you are here. I'm trusting that you have a renewed level of confidence, understanding, and clarity that many of the key issues that have been highlighted that impact South Africans, the economy, the tax base, the direction in terms of making sure that fiscal consolidation is something that we attain and actually achieve is a clear objective of not only National Treasury, but government at large. There are many more themes, though, that we do want to deep dive into. Understanding how this helps us compare to our global counterparts, especially when it comes to the emerging market space. What is happening on our fixed income environment, and of course the heightened level of capital that we do see as investment in our debt. But what does this also mean when it comes to the day-to-day interactions we have as South Africans at the coalface, where municipalities aren't functioning, where we continue to see constraints within the various institutions that the Minister has alluded to regarding the ability to ensure that our capital is adequately allocated to unlock value for us as South Africans. This is where we're going to participate in a panel discussion with 3 esteemed speakers, all of whom have a wealth of experience within the investment, economics, financial services, and political commentary environment. So we're going to participate in a conversation that will take us to at least 9:45. You're more than welcome to join us as well for this particular panel discussion and also engage, robustly interrogate some of the themes and even the new concepts that we've heard of regarding responsible saving that is going to be a priority for National Treasury. On that note, I'd like to welcome my participants and panelists who will be joining us online. A gentle reminder as well to those of you who are online, please do feel free to send through your questions through the chat service. We also will be engaging in conversations here with our audience members. We have 3 panelists who will be joining us, and perhaps before I introduce the panelists, just to get clarity in terms of the Minister's movement still present in the room. Fantastic. Fantastic. I'd like to introduce our panelists who will join us on stage to reflect on the outcomes that have been shared not only in the MTBPS for 2025, but also some of the outcomes that have been shared by the Minister today. Introducing my first speaker, who will have a seat in the second chair to my left-hand side, someone who is recognized as an economist with well over 2 decades of experience, reflecting on macroeconomic outcomes, the impact on the financial markets, investment and business strategies. He's won multiple awards and even been recognized as one of the leading economists, not only in the EMEA region, but against global competitors. Please warmly welcome the Global Markets Research Lead at RMB, Mr. David Faulkner, who joins us on stage to participate in our panel discussion. Let's warmly welcome him. David is not alone. He's joined by another sharp mind at RMB, who has essentially joined and been with the organization since her journey in the Young Investment Professionals Program. A CFA charter holder, currently works as a fixed income analyst at 91. Please warmly welcome Sisamkele Kobus to join us on stage. With any time that we talk about numbers, it's also critical that we understand the socio-economic impact, how it intertwines with political policies, uncertainty, and even the conversations that are held and shared in speaking truth to power as members of the Fifth Estate. Mkokeli is a political analyst. He's someone who has been featured in a wide variety of business news publications, more notably the Business Times as a weekly publication, but a highly regarded and well-informed journalist and political commentator, Mr. Mkokeli. Thank you so much. Well, this is where we shift gears now, right? And we rev things up to actually get the robust interrogations of the thoughts, feedback, and commentary from the Finance Minister, National Treasury at large, and of course the positioning of South Africa's fiscal priorities in comparison to our global counterparts, the impact it has on the investment community, and quite frankly, what it means for you and I, as South Africans who have been strongly encouraged to remain robust and confident in the local economic fundamentals. I'm cognizant of the fact that the Minister is still here, together with key representatives of the DTIC as well as National Treasury, but this is a safe space. No need to feel intimidated or uncertain of what to say, as you've often had robust engagements with them. But I guess as a quick fire response, just 30 seconds to get your immediate feedback, not only on the MTBPS we received yesterday, but more so even the additional clarity regarding key priorities and fiscal focus areas that have been delivered by National Treasury. How does this leave you feeling? Confident and I guess clarity in terms of South Africa's budget? Let's make it simple and actually say rated out of 10. In 30 seconds, walking our way down the panel before we get into some of the key themes. David?
Look, I think it was a very, very positive MTBPS. I think it leaves us with a lot of questions that we had going into it being answered. The inflation target kind of discussion being put to bed. I think that's fundamentally important when we think about the long-term outlook for SA. I think there's more credibility and confidence when we think about the path for fiscal consolidation and debt stabilization that was set out both yesterday and by the Minister just now. And taken all together, I think that leaves us thinking it's a very, very strong 8, 9 out of 10.
8, 9 out of 10. Got you on that one. Confidence and clarity. Isaah?
An 8 and a 9 out of 10 out of David is a really good one because he's normally on the bearish side. But I think I was quite positively surprised in that budget. We welcomed the decision for changing the inflation target to that point of 3% with the tolerance band. But I think even that alone, with the fiscal consolidation part that we saw, would have been a fantastic policy statement. But the fact that there was more traction around TARS, the 8,000 ghost workers that have been identified. Of course, there's still a verification process to make sure that they're actually ghost workers. I think when the Treasury kind of announced this a couple of months ago, I was surprised that they've gone as far as they have. And I think the work between SARS, between Home Affairs and Treasury and the DPSA in identifying who is earning unlawfully in terms of the beneficiaries of social grants is also quite positive. And the procurement dashboard, I think that's going to be quite interesting in terms of making sure that the rent-seeking behavior that we've come to see around tenders is actually limited, because if your tender is like 10 times what normal price should have been, then you should account for that.
Got you. Your rating out of 10?
I'll give it an 8 and a 9.
8 and a 9. Okay, we're finding a trend here. Sam, let's get your feedback here just in terms of your quick fire remarks and observations of the MTBBS and your rating out of 10.
Thanks, Gugu. It's hard to give it anything below 8. Look, it's a great recovery by the Treasury and the Finance Minister. I don't understand why they did what they did at the beginning of the year.
Though we were aware they didn't do it in isolation.
No, I don't know. Godongwana has been in politics forever. He's a heavy hitter, and he wobbled in his steps. And he goes and he increases VAT 2 percentage points, never been done before. He doesn't do the political management, he and his boss. His boss was meant to use his political capital to ram through the idea, through politics. Godongwana is supposed to be the guy who drives as if he's a VIP protection driver with a blue lamp. You take the budget through the politics, and he didn't do that. So what we've seen now, we've seen the 9 men who run our politics, the GNU, they meet, and there's a proper political management of the budget. It's easy, it passes better than it did. So great recovery by them.
Great recovery. Difficult to give it anything below 8. And as we're seeing, of course, commentary around, of course, making sure that there's ongoing engagement, which has been clarified by the Minister in his earlier address just this morning. Perhaps coming back to some of the themes that we have touched on and that inflationary target in particular. David, I'm quite keen to get your views here. The Minister has touched on, of course, some of the short-term strain that we might have to be mindful of, but I'm also happy for you to contextualize this within the global context of our competitiveness with our emerging market peers, especially given the runway for opportunity in terms of driving more competitive growth here.
No, look, I mean, I think fundamentally you've gone from a position where South Africa was a marked outlier in terms of its inflation target range against emerging markets that over the last 20 or 25 years, the same kind of period that South Africa has had inflation targeting has shifted and evolved their policy frameworks to basically focus on pretty much 3% as a point target with that 1% tolerance band. So this definitely brings us into line, and I think it sets a foundation looking forward for significant long-term permanent macroeconomic gains. I think some of those certainly come through the channels around competitiveness and boosting long-term investment, but I think there's also a really strong positive fiscal channel over time. I think in the near term, you have to deal with the fact that nominal GDP growth is going to be slower. Fiscal ratios are under a bit more stress, and the Treasury and the Minister highlighted that yesterday. But long term, you've got this really powerful mechanism of accumulating substantial debt service savings via lower inflation, a more stable currency, and the kind of rallying rates that we've had across the board.
Got you. Sisamkele, perhaps if I throw this to you and perhaps just reflect on the fixed income side, and a comment that has been made throughout the theme this morning is that confidence that we often see from outside investors, international investors, versus here domestically. And maybe we can also reflect on the market reaction to the MTBPS just yesterday. Currency did see a significant level of strengthening, and overall there's just an upbeat appetite, including in the media headlines regarding the reception of the budget. Your observations of the lower inflation target, impact on fixed income, especially looking at yields, and of course outcomes of performance and confidence.
Thank you for that. Any sort of nominal interest rates will have an inflation premium linked to that. And so with lower inflation, it means that the borrowing costs of the Treasury will be lower as we see that shift lower towards 3% inflation versus the 4.5% that we've had. But also just in terms of the sentiment of local investors, 91 included, at least my team, we've been on the positive side in terms of expectation. I think South Africa we have a laundry list of our problems, but it's one of the few countries, I mean, I can't recall any right at the moment, that is giving us a primary surplus. I think that's commendable. So that's why we're in a position where we start seeing the debt to GDP start to peak, and we're seeing it flatten going forward. So I think positively accepted, as you point out, and then we did see bond yields kind of rally significantly yesterday.
A key question I'd like like to throw to each of you, and perhaps Isaah, you taking the lead on this one, is of course the commitment or encouragement that the finance minister has made to say, he's challenging business, to say, let's have the conversations as to how we best allocate capital domestically, but also what are those concerns. Just by show of hands, out of interest by members of the audience, are many of you confident in allocating capital domestically? Okay. We see a few hands up. Minister, I'm hoping that you're seeing the gaze of hands across the room, because there are South Africans who remain committed despite some of the concerns that they've shared. And maybe this is a twofold question in terms of, what does business need to do? How do we mobilize that confidence to ensure that the money does hit the ground and make an impact in line with the structure of the reforms that we find ourselves in at the moment? Sisamkele, happy for you to take the lead, but open to everyone on the panel.
I'm going to make two comments, and they're not necessarily related to the fixed income space.
Sure.
Like, for example, I think with what we've seen with the Mhlanga Commission and what our experience is as South Africans, if you are a small business, you're running your spaza shop or whatever in a township economy, if you have to pay protection fee, it's a problem. So those small things does impact on confidence and your view of your country and your leaders. And as highlighted, I think it was Isaah, individuals and businesses, we experience the country not in primary surpluses as fixed income investors do, but in terms of the potholes that you see in the street. So those things do help, even though they seem basic, to reinforce confidence.
Sam?
Look, the business environment is difficult in South Africa. There's a whole lot of issues that affect growth. But we have to look at this thing beyond just the macroeconomic conversation, the fiscal policy. I'm glad the Deputy Minister of DTI is here. I mean, that department plays quite a significant role in the economy. We always knock Godongwana for this, for that, but when you look at growth, the issues that affect growth, you want to see the department playing a bigger role. You want some of the issues as well with regards to policing and the management of the SOEs being dealt with at a faster pace. So these issues are important. But also when you talk about the growth story, I mean, we still lack a credible growth story for the country. So it's hard for business to be just throwing their hearts and money into the economy when you don't de-risk what they are supposed to do. So the business environment is tough. The growth story is still not credible. Look, there's a whole lot of work that the Treasury is doing.
An unfair question, but typically people ask, what does business want? And we often respond by saying confidence, right? And perhaps having your ear on the ground, the interaction with peers, and even some of the members here in the audience, what does business want to ensure that we do roll out a significant level of capital and remain committed and confident in the country?
Look, I mean, I think critically you've got a structural reform agenda that is pointing in the right direction, right? So we've had a seismic shift in terms of how we think about the role of the private sector in sectors that have been dominated by state monopolies for so long, and where you have had that essentially influence the cost base of the economy. You need a functioning energy sector, you need a functioning transport and logistics sector. And we've experienced a period where both have got into catastrophic failure. And that has, without a doubt, played a fundamental role in terms of the very low levels of confidence in this economy, and also the encouragement for the private sector to put capital to work. I mean, if you're not sure that the lights are going to go on or you're going to get your goods to the port, why would you commit capital? So I think there has been a strong linkage among that kind of those structural constraints from a network infrastructure perspective, weak levels of confidence, very low levels of investment, and then the struggles that we've had from a growth perspective. Now we're at a point where we're seeing structural reforms start to tackle some of those issues. I think we were more excited earlier in the year because I think us, like a lot of places, thought that there was almost a straight line from a GNU outcome in the election to higher levels of confidence to a structural reform agenda that was delivering progress and starting to crowd the private sector in, and that growth would start to pick up. And the reality is, I think, that there are longer lags between these reforms, and when they start to re-establish confidence, and when they start to provide the incentive and the basis for stronger investment. So in our forecast, we think that the near-term picture is still relatively muted, right? We see it in the activity data that continues to point towards an economy that is more or less flatlining, and where you have this softness of growth. But over the longer term, we think that as you release those constraints, growth can pick up. We've got growth at 1.8% in 2027, and we can certainly understand the growth forecasts that were presented by the Minister and the Treasury team yesterday, but it will require those reforms delivering that improvement in the economic outlook and in confidence.
100%. It has been echoed right across the spectrum that, of course, this will take time. But I think what is refreshing is that despite the challenge from the minister to say, well, business come on board, we have seen clear representation here in the room. And of course, we do continue to see it in certain markets and areas of the South African economy, that confidence and the capital is following suit, including the objectives to make sure that we remain aligned in terms of the necessary reforms that we do require. Perhaps let's bring it back now to some of the benefits that we've seen in terms of corporates and paying their taxes effectively. That has been a significant driver of growth in terms of revenue and increased revenue targets that we saw being met in the MTBPS. As we've seen, a heightened level of investment has taken place within SARS to ensure that it is a lot more efficient in deriving revenue collection in the country. I'm quite keen, especially as we take a look at, where we are as an economy, improving on the revenue targets, the level of optimism that you have as an analyst viewing this particular outcome, but also perhaps sustainability, as we are aware that as of April next year, Edward Kisvete, the current SARS commissioner, will be ending his particular term and tenure. So a strong amount of investment we've made, but we do need to ensure that it is sustainable. David, your thoughts? Sam?
Look, I think we've had this big improvement in the revenue outlook in the year. So tax forecasts up by 20 billion from the Treasury side. We have them 18 billion higher. 2 billion is a rounding error given the size of the budget. And I think they are credible, and it demonstrates a number of things. One is the effects of policy changes in the past to deliver higher revenue. So we're getting higher personal income tax because of the two-pot pension with reform and the withdrawals from that system that trigger tax events, because of the use of fiscal drag repeatedly that is essentially increasing the average effective tax rate on personal income. Those are delivering better tax outcomes. And then the compliance story, I think, is showing up in a number of areas. It's showing up in terms of weaker VAT refund payments. It's showing up, I think, of bringing in more taxable income of high-income individuals into the net, where it attracts higher marginal tax rates. And I think all of this is very positive and suggests some of those projections around where the tax to GDP ratio is at a current all-time high will probably stay there. I think the element that is in the near term positive that isn't accounted for maybe fully in the Treasury's numbers or ours is that we're also seeing this surge in precious metal prices.
Yes.
That should feed through. It's not yet in the numbers. If you look for it in mineral sales or export earnings, it's not there yet, but it should improve the outlook for clearly mining sector profitability. The terms of trade gain should generate a positive income shock for the economy, and that could lead to further upside when we think about 26, 27. Over the longer term, I think the question is about expanding the tax base.
Yes.
Right? We still have a very narrow tax base, and particularly also ensuring that growth comes through, because without sustainably higher growth, you're not going to get sustainably higher revenues.
100%. Sam, your thoughts on this one?
Look, politically, and looking into the political economy of South Africa and the coalition government, these may well be our best years. So this is where you lay out the foundation. There's a whole lot you can do with this GNU, and you've got 9 political parties. They are invested. They want to stay, hold on to the levers of power. But the political terrain changes over time, and there's a lot of uncertainty. The 2027 ANC election, 2029 election, so it's hard. You can't call what's going to happen. So this is the best time to do anything in government if you want to do anything. I mean, we know we complain about the pace of things. We can see the direction of travel supposed to be going with the reforms. We don't know what our future leadership look like. We might be able to make some guesses, and we see you've got younger deputy ministers. They're in the room. They're sharp. They're brilliant. You can be confident about South Africa. But the terrain it's hard to invest on it. So we could do a whole lot more. We need to be pushing for the government. If you look at the grey listing and what the Treasury has done to get out of the grey listing, it's been a project, a decades worth of a project. Momoniat was there. They're working with people, Treasury, and personally invested in getting South Africa first to vet the grey listing and to get it out. So to get anything done in South Africa, it seems you have to have intense projects. You need the capital markets to be there. I think zap the government when it does something wrong. You need organized business to be there, to be pushing for the government. The reforms wouldn't be where they are now if the private sector was not invested, but we need more intensity around the things we're doing to help the treasury. And they are not the only people who should be running this economy, but we need to do a whole lot more. These are our best years, as bad as they are.
Got you. These are our best years, so there's a level of collaboration that we are seeing translate into the positive outcomes. And I think on the back of some of the themes that we've touched on, as we understand increased tax revenue, making us, of course, very competitive in terms of revenue. Yes, we understand that there isn't much more scope and no further debates are going to take place regarding further increases. And that does also speak to what has been described, this robustness of dialogue and debate that is coming through from the developments of the GNU. I'm cognizant of time, and there will be an opportunity for us to address your questions as audience members. So if there are any, please feel free to raise your hands and we'll get a roving mic to you. I do want to come back to a key theme that has been highlighted as well, and perhaps that does speak to what we've seen in terms of alignment, growth, which is a key one that we obviously want to ensure that we prioritize, and of course making sure that international market perceptions of South Africa do see us moving into a level of positivity. And maybe that's a fair one to actually speak to, Isaah, as we come to you to get your response on this. Friday, we're well aware, S&P as a global ratings agency, likely going to give us some feedback on South Africa's credit rating. And I'm intrigued to get your view here on the back of the fact that we should give National Treasury and their counterparts a feather in their cap. As you've mentioned, getting off the FATF grey listing is a hard-fought effort and one that certainly required a heightened level of collaboration and partnership. As I mentioned, a feather in the hat. Go ahead, Minister. We're not shy to have you mention it or show it, that there actually is a feather in your hat, as you so typically wear. And I do think perhaps let's reflect on that outcome regarding the removal from the FATF grey listing, and perhaps how that also puts us in a better positioning or even offers us leverage to actually see favorable outcomes coming out of S&P by the end of this week. Your views on FATF, the grey listing, and expectations ahead of the week?
Yeah, so I mean, for tomorrow with S&P, I wouldn't necessarily say whether from this budget they upgrade us or not, but definitely the next move is an upgrade. I think when you go through their statements and engagements with them, what you see clearly is that they want to continue to see the momentum that we're seeing in reforms. I mean, under Operation Vulindlela Phase 1, most of the reforms were network industries, which kind of yielded us the results that we're seeing in terms of energy. I mean, Minister Barbara Creasy at Transit as well has been sort of forging along, seeing those reforms coming into fruition. But I think where they may have a pause for concern to be like, hang on, let's wait a little bit to see, is whether these result in growth. Throughout their statement, you're seeing they're applauding that we're continuing to see these reforms, but they must result in growth. So it's a choice between the two. Are they happy to move now that we haven't seen the growth revise higher yet, or will they want to see the growth come first? But definitely the next move is an upgrade.
This might be an unfair question, but I believe one that still might be fitting, Isaah. Of course, next week is the G20, and we know that South Africa sits at the presidency of the G20. It will be led up by the B20 and ongoing robust engagements from business, where RMB itself as an institution has also played a part. Is this assisting us? I guess if you reflect on 2025 and the economic year that was for South Africa, on the back of the MTBPS, on the back of the removal from the grey list, expectations from foreign market participants to be heightened in their confidence in South Africa, and then wrapping it up with the G20 presidency, your reflections there?
It's a tough question. I think overall, you'll say that G20 presidency obviously supportive of the country and the attention. But under a US administration that's not very favorable towards South Africa, it did put a spotlight on us. And I think some of the things around the white genocide and all of that, which, I mean, we know it's not happening in South Africa. But I think the fact that we were G20 presidency, it just amplified all of that. So a bit of a tough response to the question. So I'll summarize it that way.
But if anything you're highlighting is the fact that we've been very diplomatic in terms of our international engagements, right? Opening up opportunities to new markets, despite the scares and the concerns about the impact on certain sectors of the economy, be it automotive or citrus, one thing is quite clear, that we have been resilient. As you can tell, I'm trying to segue into getting a response from the Deputy Minister of the Department of Trade, Industry and Competition. We'll gauge your comfort. Not keen to respond to it, Minister? Okay. Okay, we'll respect that. But I guess that's give us a clarity in terms of, ongoing participation and growth in terms of opening up ourselves to new markets, to new peers, and also being aggressive in terms of mobilizing the Africa Continental Free Trade Area Act as well amongst our peers on the continent. And maybe this gives me an opportunity to come back to you, David. And it would be remiss of me not to reflect on the RMB Where to Invest in Africa report. For years on end, we know that South Africa has been very dominant within the top 3. And for many of you who have had the opportunity to read the report, I encourage you, if you haven't, to do so, because it gives you a lot more clarity and context around the various pillars that attract investors to key markets, whether it's the island nations like Seychelles or Mauritius, who dominate in the top 2, or whether further nations and countries like Egypt, who now have proven to be strong contenders to a market like South Africa. There's opportunities and learnings that we can take from them, including markets like Nigeria and Kenya, who used to dominate the top 5 performance in the most competitive economies, now finding themselves being challenged by some of their own policy frameworks. But David, maybe this is a unique opportunity to come to you. As mentioned, South Africa's done well on a global platform, despite the odds being set against us. We're trying to do our best in terms of our fiscal reforms, aligning with monetary reforms, and that also speaks to our competitiveness when it comes to our comparison against our peers. Your view on South Africa's performance and I guess energy that we witness to continue to attract capital and remain competitive across the continent against our peers?
Look, I think if we'd sat down 6-7 months ago and gone through the global shocks that we faced, I don't think we'd be talking about a rand that was at 17 and bond yields that have rallied by 200, 220 basis points, which from a investor perspective is an illustration of, I think, a couple of things. One is that the choices of the US administration have led to a weaker dollar, which has helped a number of countries around the world. So you are seeing a shift in the environment where there is more capital, more cash going towards emerging markets. And I think investors are looking for those kind of idiosyncratic positive stories when they deploy that capital. And I think one thing you're seeing with South Africa this year is that you've got a number of very positive idiosyncratic stories that have attracted capital this way, right? The inflation target dynamic sets us apart. The progress in terms of fiscal consolidation, in-year tax beats of 20 billion or potentially more, the kind of credibility and the confidence around fiscal consolidation and the potential for debt stabilization in the near term, all of that says that from a kind of macro policy perspective, South Africa is setting itself apart. And you do see that as well in terms of international investor flows coming to South Africa, maybe less so on the FDI side, but certainly into the bond market. You've seen a resurgence in a magnitude that we've not seen for probably the best part of a decade or more. I think it establishes the positive momentum that has been there this year. And I think looking forward to build on that, what you really need to see is growth, right? So I'm at the tail end, ahead of the MTBS, I'm at the tail end of a 3-week roadshow, seeing international clients and local clients. And a lot of the focus were on those kind of macro policy levers and all the progress that has been made. One thing that wasn't really mentioned or almost set to one side is growth, right? So we can think about all of this dynamic, but the longer term picture, the sustainability only really makes sense if we get growth to at least 2%, hopefully higher. And at the moment, we're not quite there. And that, when we look into 2026, I think is where we would be focusing attention on this kind of improvement in corporate credit growth. Is that the first signs that private investment is starting to come through? And can we become more confident that this growth pickup is going to be a story of 2026?
Got you. On that note, we do want to take a few questions from the audience to build up on many of these themes we've been discussing. Of course, South Africa's growth opportunities and, of course, analyzing and unlocking more of those catalytic opportunities that can be created, understanding our competitiveness globally and even on the continent. Despite being challenged by our own issues, we still are finding levels of resilience and growth that we can tap into. Happy to take questions both online as well as a few questions from the floor. We'll take 3 questions from the floor, direct them to the panel, and 2 online, and then from there draw on some of the concluding remarks. Any questions in the room? You can go ahead, ma'am.
Hi.
If there are any other questions, please raise your hand just to allow us to take the questions back to back.
Hi, Gail Daniel from 91. Thank you very much for taking the question. Some of it seems to have been covered, but with the fiscal and monetary framework in place, it does seem that the reason business won't invest is political, and because when you look at the equity side, they're carrying a lot of costs that should actually be covered by the government in terms of, you know, you see Life Healthcare having to employ doctors in the public sector in order to get qualified doctors. And there's an article of ShopRite really complaining about this food supply chain, which they've been trying to kind of keep undercover for a while, but they're saying that essentially saying that the multinational companies aren't investing. And why aren't they investing? And that's what we need to drive the growth higher to 2%. And it's got to come down to political uncertainty, because the framework as put forward by the Minister and with the Reserve Bank does seem to be very solid. So my other question, of course, would be that I was delighted to hear the Minister describe himself as a defunct Marxist. So if he is a defunct Marxist, then what? If he isn't a defunct Marxist, then what is he? And are the ANC still Marxists?
Awesome. We'll see if Minister, if you're happy to have you respond to it. Let's take two more questions from the floor before we do get responses to the questions as well as feedback on some of the themes that have been mentioned. No need to be shy. I'll tell you what, we'll come back to. Thank you so much, Mr. White. If we can go ahead with your question, we'll just ensure we get a roving mic to you. Any other question? Please feel free to raise your hand high. It's easier for our technical team to identify you.
So I have a question for the Deputy Minister of Trade and Industries, and it relates to how we get foreign investment into South Africa. And a number of foreign investors have pitched up and they've tried to buy South African companies. And the proposal has got embroiled with the competition authorities, who have imposed restrictions that are so onerous that eventually these investors just leave. So what can you do to make our competition policy, I guess, more friendly for people that truly want to invest in South Africa?
Thank you so much, Mr. Watkins. Any other questions from the floor before we move the mics to... Oh, Mr. Mhlanga, go ahead.
It seems when we target something, we achieve it. The grey listing, it was very targeted. Hence, we are out of the grey list. We're talking about a 3% inflation target. We're likely to succeed on that because there's a target. There's a fiscal deficit of 3% over the medium term, just around there. Can we explicitly say we target a 3% growth and come up with a program or at least action items that we need to push in a concerted way, in a similar way that we did with the grey list to achieve that 3% target? So essentially a 3-3-3 target. Inflation target, fiscal deficit, and growth.
A question or a challenge?
Sure.
Fantastic. Thank you so much, Isaah, Sean, as well as Gail, for your questions. If we could please have the handheld mics to my colleague in the black with the technical, could we please have the mic come forward to the front to these two gentlemen here? To the Deputy Minister in Trade, Industry and Competition, I tried to give you some leeway, but however, there is a question for you. Let's start with the first one that did come from Gail. Perhaps Minister Godongwana, if you can respond to that. On a lighter note,
About?
Being a defunct Marxist that Gail has responded to, but more so also speaking to some of the themes regarding political uncertainty and maybe providing a voice of confidence to ensure business does roll out capital, especially given the domestic examples she alluded to, ShopRite as well as Life Healthcare.
Let me come back with my being defunct Marxist. Let me deal with this political uncertainty. You know, I don't know what we can do to convince the investment community that, investor community that, in fact, South Africa is stable politically. Let me just draw a parallel. If you look at the old European countries, developed economies, to set up a government, it takes them months, years. In South Africa, we elected a president in 14 days. 14 days. we had a government, we had a president. Within 2 months, we had a working government and a cabinet. Things you hardly find in the developed world. You can go now to Netherlands, how long it did take them to constitute a government. The Germans were fortunate now they've constituted a government, but it took longer than us. We now, like in all other coalition governments, the question of a stable coalition government is an issue. It's not only of South African singularity. So if you ask me, why do people talk about political uncertainty in South Africa? It's difficult to understand unless people tell me what are these key ingredients that are lacking so that we should be able to talk business. I think South Africa is stable, political, we've got challenges. One of the key things which worries me more than anything else is crime. If it were to be a litmus test of political stability, I would say yes, we've got a problem. But we are a country, political stable, respect for human rights, respect for political. If you come out and insult a president, not a big deal in South Africa. Even for the president himself, it's not a big deal. You know what I mean? So we are quite a stable country political. I would say to Isaah, targeting is quite interesting. And what prompted me to think about it, there was an article by Professor Phil Berger, and he was criticizing what is known the development state issue in what he called the conundrum. Among other things was to say to us, for you to be a development state, you must have a focus. And in most cases, those countries that managed to succeed as development state have been focused on growth. And I think is what I was inviting all of us to say, can we together as a country, not only as government, but as a country, say we need to focus on growth and what are the key things we need to do to achieve that objective? I think I would agree. Defunct Marxist. What happened with the evolution of the Marxist tradition? Schools of thought emerged within the Marxist tradition. Schools of thought emerged. And in particular, what became dominant in the European side, Western European side, was the emerging of one school of thought called social democrats. I would classify myself as within that school of thought, except my critics said I've gone to the extreme, I'm a neoliberal. So it's a label I can carry. But from a conviction side, I still believe that I'm kind of within that school of thought called social democrats. I'm not really, it's a label to call me a neoliberal than my own tradition and belief system. So that I'm kind of called it defunct in the sense that the traditional, what I would call the traditional other school of thought, which called itself communist, labeled the social democrats as un-Marxist. So I call myself defunct in that sense, but I'm classifying myself within that school of thought called social democratic tradition, which emerged in Western Europe as a different form of Marxist thinking.
You've responded to all the questions, Minister. Thank you, including the key ones regarding how best we drive growth.
Yeah.
Gail, I'm hoping you're content together with Isaah.
Of course, in driving that, I must say, we've got to look into the regulatory framework. There's no doubt about it. That's why at some point the president appointed somebody else to look at it. It's damn irritating. You know, I was in a dinner with some CEOs and trying to boast about how we have changed to Vulindlela, changed the visa system and so on. And the CEO of Coca-Cola Southern Africa raises a hand and says to me, it's nice, Minister. When they're talking about the visa system, that's nice thing to say. My chairperson of my board is a Mexican, lives in Atlanta, denied visa twice. There's the intent, which is in what we want to achieve in terms of regulatory framework, and there's a practice which sometimes work against that. You can imagine if a chairperson of Coca-Cola Southern Africa is refused a visa twice, what does it say to us, about us, to the investment community? I think those are some of the things we need to attend to. I'm not sure whether Minister's DM is coming on the Competition Commission. Those are regulatory issues we need to attend to.
Got you. Thank you, Minister. We kept you quiet earlier, but I'm glad Mr. Watkins has gotten you to respond. Essentially, driving competition in South Africa's economy, what are we doing as the DTIC?
Okay, thanks, Gugu. I had no intention of speaking, but he's tricking me into speaking now. I'm not sure what Mr. Watkins was talking about, the whole scope of what is of concern with competition policy, but one of the issues that we've now decided to do is to lift the threshold on the transaction value that must be subject to some of those regulations. So I'm sure it will deal with some of those elements. The tricky thing about competition policy, of course, is that you have to agree as a country, are you for concentration or are you against concentration? And how do you approach that question? So you have to strike a balance between encouraging people to come in and invest and avoiding concentration, which also in the long run undercuts growth. So that's the difficult part. We're trying to lift up the thresholds. Might as well weigh in on the other stuff that you were saying. Isaah, one of the problems that we've created in South Africa, and I think the National Treasury created for themselves, is this idea that economic policy is valid only when it is pronounced by the National Treasury. So the 3% is already there on growth, pronounced by the presidents. We're pursuing a 3.5 growth rate by 2029, it's there. It's just that it was not in the statement that was made by the minister. So we are already on that. And one of the things that we are trying to deal with, which I think the point arose about the cost base, is to try to reduce the cost of electricity for industrial sectors, for instance, because those are some of the levers that you want to arrive at that 1.5% next year and potentially over the medium term. So we, from the DTIC, speak about a whole of government approach to the growth question. So the one thing that we are all obsessed about is growth, 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 growth. One of the points that I always raise with the Minister of Finance, since he was alluding to earlier, I was saying, we can do all kinds of fiscal maneuvering that we want to do. If you don't deal with the denominator problem of growth, you are not going to solve any of the other variables. So that's the headspace of government. That's what all of us in government are thinking. That's what all of us are saying. When I was talking to him about the inflation problem, for instance, the point that he makes, I was saying to him, if you want to deal with the growth problem, you have to deal with the cost-based problem. That includes your administered prices on our side, but also the cost of capital as well is an important variable in that. So be careful not to solve one problem and create a runaway problem on the other end. That's the point that I was raising. And that's the frame of thinking that we have, not just in the DTIC, but in government at large. So there is alignment on that. You are correct when you say we seem to do well when we projectize. It's one of the experiments that we've been trying, and it's starting to work out very well. Last night we were having a conversation with other people, and I think it was Mr. Nechitenja was making the point about one province in India that has actually projectized ending poverty. And what did they do to get there? So we say we are going to start projectizing in that manner. If you look at what we announced in October, from the ANC side at least, with the 10-point plan on the economic implementation plan, it's that thinking about projectizing economic management as well. Focus on few areas, attack them seriously, and then review progress after some time. Then you are able to know, what are we getting wrong? Of all these variables, which ones are giving us the headway we need and which ones are dragging us back, then you can adjust as you go. I am confident that we can get that done, but it requires a whole range of other interventions to go in, including the local government issue that he's helping us solve. I'm very happy with the work that they're doing on helping local government authorities to deal with these problems, because part of the growth runway we need must be built at that level. You can get it right at the macro economic framing, but if you don't get it right on the ground, as the people who must hold the investment on the ground, then this whole thing is not going to work out. Thank you very much.
Thank you so much, Deputy Minister Kodlimpi, giving us insight there, hoping that he's addressed all of the concerns and more so even giving us more nuggets to be mindful of in terms of how best it is that we're driving competition, ensuring South Africa remains competitive, but that growth is really a government-wide objective. So we have the fiscal clarity, we understand how the monetary policy is going to be positioned, and perhaps I'll gauge some of your views in a moment as to what that might look like by the end of this month at the final MPC meeting for 2025. But one thing is certain is that there is clarity. Many moving parts, but we are working on targets which have been shared, are clear and concise, and there is a concerted effort to make sure that we meet these targets. We have 2 more minutes left before we wrap up this particular panel discussion, and I'm aware that we've had a robust conversation and, of course, clarity from various government divisions. But as we close off, I guess I'm keen to get, number one, the key objectives that we, as South African investors, business leaders, co-creators and participants in being catalysts for growth, need to be mindful of as we move forward into ongoing day-to-day and keeping the business and the lights on by understanding the objectives of the MTBPS, but also speaking to some of your unique viewpoints on outcomes that we should continue to expect. And perhaps, David, your concluding remarks, and perhaps if you can tie in just your expectations as to how you see clarity now being given from a fiscal policy point of view regarding our inflation target, how we see that being followed through and implemented by the MPC, especially headed into their next meeting, last one for the year, by the end of November.
Yeah, I mean, we've always thought that the next policy move from the SAR was almost a contingent one, that it was contingent on that formal adoption, that formal endorsement of a lower inflation target from the Minister for Finance and the Treasury. So having got that, I think that gives us more confidence that the likelihood of a rate cut next week is relatively high. I think what they will argue is that by getting that buy-in from the kind of core macro institutions, that expectations are more likely to moderate over time, given that we've now had this formal adoption of a 3% target. I think over the longer term, our view is that there's probably a total of 75 basis points of further rate cuts to take the policy rate down to 6.25% by the start of 2027. Although once we get past next week, I think it's going to be very key to see inflation expectations move and anchor lower, particularly among businesses. And then secondly, that inflation does start to anchor durably lower over the longer term.
That we know is also subject to exogenous factors that are beyond our control. And given the world that we live in, there's been a lot of noise and many moving parts, sometimes often offset by a tweet by the White House. Perhaps this is where I can get your closing remarks here, Isaah. Expectations, of course, as we do move forward, there are still some exogenous risk factors, but overall, performance of our fixed income space and how this is telling of confidence, not only from international, but hopefully domestic capital as well.
Yeah. So I think the bond market has penciled in quite a lot of good news, and at these levels we start getting a little bit nervous that there'll be a little bit of a giveaway. But I think from a fiscal policy and Minister of Finance and Treasury perspective, ours is to sort of be the accountability partner as their clients, as the Minister put it earlier in his remarks. I think I'm quite excited to see what this TOS sort of says for us. I think we do spend quite a significant amount as a country, but we don't necessarily spend it efficiently. I mean, one of the things that the Minister mentioned around NSFAS, I was like, oh yeah, no, that's a good point. So is to see that come into the numbers so that it can be reallocated allocated to where spending and investment is actually needed.
To come to you, Sam, one thing that is quite clear that has been shared by the various leaders of the DTIC as well as the National Treasury is that government is aligned in terms of our growth targets. What we need to ensure, though, is that there's alignment and consistency over the long term. We've come through the growing pains of the GNU, and I think it's evidenced by just how quick, efficient, effective, and how there's been agreement in terms of the latest MTBPS. What's your reading, especially headed into a local government election year for South Africa in 2026? How best we maintain this level of alignment, partnership, and camaraderie to drive the growth that we require?
For now, all the GNU partners won the jobs. Gaten Mackenzie couldn't have dreamt of being a Minister of State in the government and meeting the President, Finance Minister to discuss the budget. Songezo Zibi, the same. So all they want is to be in government, and they want to hold on to that. Elections will come, silly season, the harsher statements will be made, it will look volatile and unstable, but deep down, they want to hold on to that. But
beyond the personalities of the politics, what is it that we hold leadership accountable to, though, regardless of who's actually in key positions?
Look, that's the state of things. That's what, if you were to look around and what the differences are, the beautiful thing to watch has been the differences between the governor of the Reserve Bank and the finance minister over inflation targeting. There is a discussion that you can have. You can see what it is. It's not just a personal thing. The finance minister says he's had to fight with a friend he's had for 35 years. I assume it was about the inflation targeting. So right there's a policy discussion. Outside of that, the nature of our politics, it's identity politics, it's personal, people are involved. But one thing I'm watching quite closely, Gugu, is how now the finance minister and the chair of the ANC Economic Transformation Committee, they steer the things that have come out of the budget into the politics. How do they manage the ANC's discussion of inflation targeting so that it doesn't come up as an issue? In the past, the ANC had brought up issues that created uncertainty and volatility in the capital markets. The nationalization of land, the nationalization of the Reserve Bank. I've been watching this thing becoming an issue now, inflation targeting regime. So how do they keep things as they are? And when the ANC discusses policy, it discusses in a very chaotic way. I'm not saying this because the DA has gone. I would have liked to have critiqued Mr. Asarupen in his presence, because the DA has not learned the ability to make policy in a way that is credible, that we can even critique. But how the ANC is going to handle that moving forward? Trevor Manuel tells me once that how the ANC looks at policy, it treats it as if macroeconomic policy is the be-all, end-all. He says it's like a Maskandi band, where macroeconomic policy is the base. It's not the totality of everything. So that creates chaos, it creates Vuvuzela-style politics. Enoch Godongwana was there in stopping the nationalization of mines, the management of the nationalization of land. He came with a caveat at the end, that you can grab land in a way that doesn't affect the financial markets. How does he do this now? What lessons has he learned out of his own wobbles? How does he manage this with Zuko Godlimpi now in charge? We have to watch him closely, how the ANC evolves with 40%, how it lives with that. It's going to be an exciting time.
Interesting, exciting, volatile. There's so many adjectives that we can find to continue to put in there. But one thing is for certain, right? We're well aware of the environment that we operate in, and whilst we try to ensure that we remain a globally competitive economy, we also need to ensure that we meet the fundamental needs of our local dynamics. There is a response from fiscal policy, alignment, and as well from a monetary policy point of view, and right across the spectrum of government at a national level is alignment on growth. It's a priority, there are key objectives, various departments are implementing their own and necessary reforms, but fundamentally accountability is what we're also driving. It's also come through as a key priority for National Treasury too. All of this together as we journey between business, members of capital markets, economists, investors, and of course government is to ensure that we partner together to prioritize sustained economic growth in South Africa, which will be propelled to elevated levels, but also ensuring that this filters down to the socio-economic imbalances that exist in the country and ensuring that we even the level playing field, providing support, opportunity, and equity to all South Africans to ensure that they too are proud citizens who continue to contribute to growth. With that said, that's where we leave this Think Budget for 2025 into the medium-term budget policy statement. Many moving parts, lots of thoughts, but most importantly, it's driven and encouraged what we all want as South Africans. Robust debate, conversation, targeted growth, and of course, actually meeting those objectives and reviewing the measurements and outcomes at the end. A big thank you to my panelists as well for joining us today. Mkokeli, Isaah, also joining us today, as well as David Faulkner, giving us insight into the various themes that we have to touch on and be mindful in the MTBPS. We've just touched the tip of the iceberg. As you've heard, there's so much more to deep dive into, but further insights, analysis, and perspective will always be provided. To those of you joining us online, thank you so much for your time, as well as the questions that you've shared. Our audience, thank you for joining us. You could have been anywhere else in the world. You kept your phones on silent. Despite the fact that you are influencing, shaping, and growing the economy, we appreciate your dedication, commitment, not just to this forum, but to the South African economy. So thank you very much for your time. We'll leave it there for today. We wish you a profitable and successful day further. Thank you.